Okay guys, here's how I lost on EUR USD today. So as you can see here, right, when we jump onto the H4, we firstly need to dissect and understand that the H4 is in a ranging phase. Okay, yes, we can look at it as a bullish or bearish, range, but ultimately price is just ranging. Okay, as you can see from here, since the back end of Friday, price more so just been moving sideways, up and down in the same sort of area. Okay, so keep this in mind because it will make sense shortly, right? When we jump onto the M15, as you can see here on the other hand, pretty much what I was looking for. Okay, we had obviously seen this huge bullish leg to the upside there, and pretty much just broke more structure, forming a new range high and low inside of this bullish range. Okay, and then pretty much from there, price is more so just consolidating. Okay, every time we more so come up into this area, typical resistance is just rejected. Okay, vice versa, every time we sort of came down into this area, we just rejected. And then pretty much what I was keeping in mind here was that I was looking to play the edges of the range based on the high time frame and even the M15 range bound market. Why? Because we were externally still bullish. We just filled some previous order and some imbalances there. Okay, we came back down and mitigated the extreme points of interest. And also when you look at this here, we had a wick rejection. Now this was a low probability setup, and I was aware of it being a low probability setup. I even said to myself, if this is a low probability setup, I'm going to risk less, but I'm going to go and take the trade. Now the reason why it's a low probability setup, one, because price is ranging. Okay, two, we're overextended with inside of this bullish leg. Three, when you look at the internal structure has not aligned with the external bullish range. What I mean by that is we are inside of this range low and high, still currently, and as you can see, if I was obviously to wait for the high probability setup, I'd want price to close above this high here, then pull back and obviously give me a nice, CP or BLC entry. Okay, so that are the three reasons why it was deemed a low probability setup. As opposed to if it was obviously the opposite and the three things were actually intact. So for example, the internal was aligned with the external, was inside of the premium, the extreme POI, etc. Right, and price wasn't ranging, I was trending, then it would be obviously a lot higher probability setup to take. So pretty much from here, what I was looking at, I thought, well, I'm just going to jump the gun a little bit here and jump onto the M1. I had missed this previous wick rejection here to long from. But as you can see, we came back up higher and we just wick rejected it. Okay, but also we came back lower, we mitigated this wick here, and obviously from there we can jump to the M1, and I pretty much just looked to target into a fixed 2R. It did take the highs as anticipated. It ran up to around a 1.8%, 1.9%, which is still great. But I had a fixed 2% target. Had I managed it better, maybe I could have maybe adjusted my stops a little bit more. But either way, honestly, I'm not too fussed about this trade here. But I'll show you the M1 now, and as you can see here, this is my position. Okay, so this is the previous wick rejection which I was talking about here. Okay, so you could have jumped from the M1 from here. Nice BRC entry there. That's the only type of entry. Okay, and you don't want to be entering off this next available BRC because it's just not really. It's just not, it's just too big. Anyways, as you can see from here, right, what I looked to do was we came back down again for the second time. We shifted bullish, range high, range low, and this just looks like the M15, right, besides all the range. And as you can see from here, we mitigated this area. Okay, we filled all the imbalances there that was available, aka I say all but this one, and as you can see, we reacted to it. And obviously I had missed this candle here, so I came on to the next candle. I want to see how this one would close. And then I entered around here. I entered around here off this candle, but I got filled in around here with spreads. And then obviously, that's just one of the cons of being, manual executor, but it's what it is. If you're asking why if I take limit orders, I sometimes do. But whilst we're talking about orders and stuff like that, guys, and imbalances, I have a liquidity ebook launching on the August 8th at 8 AM UK time. So if you want to go ahead and check it out, it's only $19 for the first 3 days. It's a highly anticipated book. A lot of people have already added it to their wish list. It's going to be a great ebook, honestly, guys. It's just based around not just on liquidity alone. So you won't also just gain a deep understanding of liquidity, but you'll also gain a deep understanding how that pretty much the market mechanics work. So the whole sort of the hidden engine behind the market movements, right? You will learn everything. You'll understand why you should view this game as an operator, so the composite man yourself, like Wyckoff mentioned. Not also that, you'll also learn how that you'll learn how the market is run on human psychology. And there's just so much more. I've also included some chart examples in there as well regarding liquidity. But yeah, it's a liquidity ebook. It's an amazing book. I highly recommend checking it out, guys. Add it to your wish list. The link will be below in the description. With that being said, though, as you can see from here, I got filled in here, and I pretty much targeted the fixed 2R. As for my stops, this is just below an internal low, and obviously, as you can see, we had the nice initial move. It was going great. I was in profit, and then I pretty much went to go and send some analysis out to my Discord. So what I did at the time is I adjusted my stops here when prices around here, and then I just thought, well, I'll let it run now for the rest of the trade. And as you can see, price came back down. We shifted bearish, checking out this low. So what I should have done is obviously, managed it a little bit more aggressively. Then it would have been a nice little win, but a small win. But guys, this is my loss on your USD. As you can see, that on the right side here, this is the DXY. If you're wondering what this is, so when you take a look at the 50-minute on EU, this is the 50-minute on the DXY. Okay, it's pretty much the same reasoning as for the DXY, just the opposite way around. But guys, this is a loss on your USD. I hope you gain some value from this one. Make sure you go ahead and study it if you want to. It's from Tuesday the 5th of August around 8 a.m. UK time. So take care, guys. Have an amazing rest of your day, week, month, and make sure you cop the liquidity ebook as well. Take care.